the market's sharp swings probably have some of you wondering what's coming next. So we're getting chart master Carter Worth to break down the key levels he is watching for the week ahead. Carter.
Sure. Well, I mean, in a way, the market is sort of just in no man's land here. And so in that sense, you can make the case for the bull, for the bear. But let's look at a few charts and figure it out. 3 in total. So the first, just simply, you can see on your screen, it highlights the high for the year, the low for the year, and then the midpoint. And what we know is that equities peaked on that Tuesday, February 19th. They plunged, it bottomed on that Monday, March 23rd. And then this impressive gain, 47%. And now the churn, the stall. The midpoint is that 2,800 level, which you can see sort of highlighted there. So now the second chart, it's the same chart, but I've also included the trend line in effect since the March 23rd low. And what we know is, of course, that we've broken that trend line and we're churning, we're stalling. We tried to get back to it, but we're still under it. And ultimately, I think this is, whether you're bullish or bearish, it's good, because if you're bullish, it's the pause that refreshes. If you're bearish, you think the churn is the beginning of something worse. To that end, the third chart, if and as this is the beginning of something worse, that's my hunch, and we do give back more than we have given back, a reference point would be the midpoint. And so you can see here on this chart, the high for the year is annotated, the low, the midpoint. You see we've broken trend, and now where to? I think we get to 2,800. At that point, there'll be some real jockeying for position. But we know that VIX is elevated, and there's still a lot of issues with all the things that people are hoping on, banks, industrials, and so forth.
Carter, thanks. We'll see you next show, Options Action. And Jeff, you also were looking at the charts. You're noticing a relationship between airlines and the broader markets.
Yeah, I mean, look, I've had my reservations about the market in general from a fundamental perspective, and I think, you know, we're in the beginning periods of healing, but I think the market's priced in a lot more than that. So I'm not exactly sure what's going to be the catalyst from here to something more substantial in the market. And I was just looking at the correlation. I talked about this last week, but early in the trading session, actually the correlation between cruise lines, airlines, casinos, we were up, but you had some red on the screen there. And even within airlines, you had some up and some down. So it was interesting. Typically in these really strong days in the market, you're seeing green across the board in that reopening trade. You did not see that early in the trading session today. And although I didn't necessarily know it at the time, it was perhaps a foreshadowing of what was to come for the rest of the day. So that's interesting. And then Carter also mentioned the VIX. This is also something I'm keeping my eye on, but usually just because of the construct of the VIX, you have a negative correlation between the S&P 500 and the VIX. S&P 500 is up, VIX down, and vice versa. You've actually started to see some days where the S&P 500 is up and the VIX is also up, where the S&P is down and the VIX is down. Today was one of those days. If you look back over the last number of years, I think in the last 3 years, you've only had 4 occurrences where that 20-day rolling correlation between the VIX and the S&P 500 turns positive. You know, one day doesn't make a trend, but when you see that 20-day correlation turn positive, it's actually been problematic for the market in the coming weeks. It was early 2018, late 2018, mid 2019, and then early this year. And just intuition speaks to, as the market continues to rise, if the VIX is also rising, the options market might be sniffing something out. So we're not quite there yet on that 20-day correlation number, but we are hooking higher and the correlation's becoming less negative. So pay attention to that, because it's been a good signal over the past couple of years.
Funny you should bring this up, Jeff, because we happen to be in the company of 3 options traders tonight on Fast Money. So, Pete, I'm gonna toss it over to you and see if you notice this, and also sort of does it raise your eyebrows?
Well, I've noticed it. It doesn't really bother me as much, raising my eyebrows, actually, because of the fact, Mel, when we look at the intraday movement that we've been seeing, and I always just go back to the idea that it's not a fear index, it's an index that's telling us what are the expected moves. So you call it just north of a 32, you're talking about a 2% move on the S&P every single day. Well, we get something close to that if you look at the VIX from the perspective of, or the markets from the perspective of the lows to the highs and all that movement in between. I think it's warranted to be here right now. And we have had days where we've actually seen the markets go up with the volatility index going up. But for me, that makes sense, because we are seeing movement like we have never seen before in the marketplace when we see some of these swings. So it doesn't bother me. I've noticed it, obviously, and I'm using the VIX. When it's high, I'm using it to buy stocks and sell calls. And on the opposite side of it, when it gets cheaper and it gets closer to 30 or below, I'm then once again adding more option positions than I am stocks.
Professor Khouw, what say you?
Yeah, I mean, I'm kind of with Pete here. One of the things that's important to remember about the VIX also is that options prices are not necessarily trying to forecast the direction of the market as how much it's going to move. And you can suddenly incorporate new potential events or catalysts that essentially require the premium or the insurance cost for the market to rise. So do we have some things that are taking place over the course of the next 30 days that would justify a higher VIX level or a higher implied volatility price of options, even if we weren't seeing the kind of relatively violent swings from a historical context that we have been seeing? And the answer, of course, to that is yes, we've got things like bank stress tests and things like that. So when you have that situation, that's partially, I think, what the options market is looking forward to.